So in this session, I'm going to talk about a very interesting topic, and that is the ugly truth about support and resistance. So as you guys know that the objective of this channel is to educate our fellow investors and traders. And we intentionally try to stay away from any sensational topics, any topics that are irrelevant to the stock market, and any other topic which basically will not elevate the knowledge of all of us. That's what we try to stay away from. So this topic, when I selected, I wanted to make sure that I have something very interesting. I have something very important to share with all of you. Now, before we talk about the ugly truth about support and resistance, just want to make sure that you guys understand what are support and resistance, right? A lot of you are relatively new, so probably might not be aware of the concept of support and resistance. So the idea behind support and resistance is very clear. So if a stock, for example, goes higher and lower and higher and lower. So in this particular case, this particular line right here, it will be called as a support, and this line right here will be called as a resistance. I'm taking a very simple example. Of course, the idea is to just illustrate the high level concept. The support is a price zone from where the prices bounce back up, and resistance is a price zone from where the prices come down. Right? That's the basic idea, and there are many reasons why support and resistance work. One of the more commonly accepted principle is that at the support, the valuation of the company becomes cheap. So buyers, they become very active at the support, and at the resistance, the valuations of the company go very high. And that is why people who are sitting on profits, they book their profits and they come out, right? That's the basic concept of support and resistance. Now we understand the concept of support and resistance, but do they really work in real life, right? That's the question. So let me take a practical example for that. So I will take an example of a trade that I have taken today based on the support. So this particular trade is what I'm talking about. So this is the market today. Let me just show you guys. So this is the market today. And as you can see that market basically bounced back from the support level. So you can see this is the 5-minute chart of today. And the way the market bounced back from the support, right? So the market, let's say, came down here, bounced back up, came down here, bounced back up, came down here, bounced back up. So this area is also called a support zone. So just like the previous day and the previous days before this, when the market today came down to the support zone, it bounced back very sharply up and it closed towards the highs of the day. And the way I dealt with this is that I took a long position on the market. I don't have time to explain all the orders here, but I will just tell you that 115, I took a long position on the market. So let's go back here, 115. So 115 is somewhere around here. So this is 2 o'clock. So somewhere around here, I took a long position. So when the market came near the support, I took a long position and I was not able to ride it all the way back up. I basically made some money when the market came here and I had enough for the day. But support and resistance do work. There is absolutely no doubt in my mind that support and resistance don't work, because I put money on the line when I find strong supports to take a long position, and money on the line when I see resistance and there is an opportunity to short the market. So given that I am making money from the concept of support and resistance, I have no doubt in my mind that the concept works. But there was something very interesting that somebody asked me, and the question basically intrigued me so much that I thought I will make a video out of it. So the question was this. Okay, so when we talk about individual stocks, it makes perfect sense that, okay, yes, when the stock comes down to an undervalued area, the buyers come back in. And when the stock goes to a level which is very overvalued, the resistance comes in. So it makes perfect sense when we are understanding individual stocks. But how can you make sense of the overall market, right? So if the support that I'm talking about is for Nifty 50, how does a support and resistance, the concept of support and resistance, is applied in the case of an index, not the stock, in the case of an index? So that was a very intriguing question, that how can an index have support and resistance? And that is what I wanted to deal in this particular session. So as you guys can see that people, we read articles every day where people talk about key support and resistance level on the Nifty, not on an individual stock. They talk about support and resistance level on the Nifty, on the index itself. But if we take a look at the composition of Nifty, Nifty is not comprised with only one type of stocks. Nifty has about 40% weightage coming from the financial services. includes banks and NBFCs. 17% is coming from IT companies, 12% from oil and gas, Reliance and stuff. So Nifty is a very well diversified index. So when people talk about a support in Nifty, what they are saying is that the moment the market comes down to that support area, there will be buying in a majority of these stocks in banks, in IT, and consumer goods. Now, how is it possible that banks become undervalued at the same time as IT became undervalued, as at the same time automobiles and telecom and cement and consumer goods, they all became undervalued at the same time? That doesn't make any sense. So how is it possible that Nifty as an index can have a support? So what we'll do for this is that we will go one by one and see what happened. So the market basically bounced back somewhere around 2 o'clock, right? Let's take a look at some of the stocks that make up Nifty, the Nifty 50 stocks, and see what happened in all those stocks. So we'll start with Reliance, the big boy Reliance here. So oil and gas. So Reliance, of course, had a big rally from somewhere around 2 o'clock, right? So very, very, very strong rally from the lows of the day. Okay, Reliance makes sense. What about HDFC Bank? So banking sector has nothing to do with Reliance. Let's see how HDFC Bank moved. Well, HDFC Bank also moved towards the highs of the day from 2 o'clock. Okay, all right. So it may be a coincidence that maybe Reliance and HDFC Bank, they moved at the same time. But what about IT? Let's take a look at, let's say, TCS, because TCS has nothing to do with Reliance. TCS has nothing to do with HDFC Bank, right? It's a completely different sector, IT sector. So let's take a look. Well, TCS rallied heavily from 2 o'clock. It ended up at the highs of the day. Let's take a look at one more IT company just to make sure that we are not dreaming about this, right? So let's take a look at Infosys chart. Infosys also rallied at the highs of the day. Let's take a couple of more examples. Let's say in telecom, let's take a look at Bharti Airtel. So let's see what happened to Bharti Airtel. Bharti Airtel also rallied from 2 o'clock all the way towards the end of the day. Now let's take one more sector. I'm going to take, let's say, Hindustan Unilever here. So Hindustan Unilever, so again FMCG sector, right? Same situation. How is it possible that Hindustan Unilever, an FMCG company, telecom company, IT company, bank, and Reliance, a conglomerate, all of them were undervalued at the same time at 2 o'clock, and they ended up towards the highs of the day? How can there be a support for an index? So what exactly is going on here? I mean, that's the real question here. Okay, support makes sense on individual stocks, but it doesn't make sense on the index. So what is the real answer? What exactly is going on here? And the real answer is that we are in a casino, and the job of a casino is to take the money from the gamblers, right? So all those people who go to the casino to make money, the job of the casino, people who are running the casino, the big shots, the people who have real money, the reason they opened the casino is not to give the money, but to take the money from the people. What exactly is the connection between the stock market, Nifty, and a casino? Well, let me show you. All right, so take a look at this. So this is what a lot of you guys are aware. This is called option chain. And basically what this is telling us is that there are people who have bought these tickets for hitting a jackpot, right? And these are all the tickets that were sold by big institutions. And the reason they sell these tickets is because people buy this with the hope of getting a jackpot. But these people, they are playing the game of probability. They don't want you to hit the jackpot. So in case this is becoming a little bit technical for you, let me explain in a very simple terms. What happens is people who are very bullish on the market, they buy call options, right? So they will say, okay, for 15,500, 15,600, I will buy call options. So when they buy these call options, regular people like you and me, when we buy call options, who is selling those options? People who are selling those options, they are not like you and I. They are big institutions. Similarly, people who expect that the market is going to go down, they buy put options. And who is selling these guys a put option? Well, the same big institutions who sold to this guy, they sold to this guy as well. Now, if the market goes higher and higher and higher, of course, this person will make money. And if the market goes lower, lower and lower, this person will make money. But if the market stays in a particular range, then who is going to make money? Well, the people who sold these call options and put options to these guys, and those are the big institutions. So it is in their interest to make sure that these levels are not crossed, and they will go to any extent to make that happen. So what happens is when the market starts to go above the resistance, for example, these big institutions, they start selling Reliance, they start selling HDFC Bank, they start selling HDFC. And when the market starts to go below the support, they start buying these big stocks, Reliance, TCS, HDFC Bank, like we saw today. So by buying these stocks when the market starts to go below a certain level, and by selling these stocks when the market starts to go above a certain level, the big institutions, they are making sure that they are eating the premium from both the call buyers and the put option. So this is the game that is being played here. The support and resistance that we saw in our example, they have nothing to do with the fundamentals of the company, right? Hindustan Unilever, HDFC Bank, Reliance, Bharti Airtel, all these stocks cannot all of a sudden start going on the higher side, right? And the same thing happens when the market starts to come down from a resistance. This is done not by accident, this is done by, and this by the way doesn't need to happen for a very long time. They only have to keep the levels in check for a very short period of time, because all these contracts, they have an expiry date. So some are weekly expiry, some are monthly expiry. As long as all these levels are held only for just a few days so that they can eat the premium. So the question is, does the casino always win, right? So if that is the case, then people who are writing these options, they should always win. The answer is no. But the house eventually wins. So the game that we are playing here, every week, every month, when these guys are writing options, sometimes they are not able to control the levels because of some news flow, or that some market sentiment becomes very strong or very weak. In those cases, they probably will not be able to control. But eventually, if you see from a long-term perspective, eventually the house, that is the big institutions who are writing these options, they eventually win. And who loses? Well, retail traders like you and I, who are buying options with the hope that the market will eventually go to a certain level. We buy those tickets in the hope of a jackpot, but what eventually happens to us is that we lose money. So far we talked about the importance of support and resistance and how the big institutions, they manipulate the market to make sure that the market holds on to these levels. But does it really matter in investing and trading? Well, Benjamin Graham said something very interesting. He said that in the short run, the market is a voting machine, but in the long run, it's a weighing machine. Now, Benjamin Graham said this in the 20th century, and at that time we didn't have these sophisticated instruments of futures and options. So I will make a little bit correction, very humbly making a little bit correction to what Benjamin Graham said. I will say that in the short run, the market is not a voting machine, it is a casino. But in the long run, it is a weighing machine. And the weighing machine basically means that if the stock is fundamentally strong, it will eventually go up. Right? So no one can stop a stock from going up eventually, but in the short run, they can. So if you are an investor, then you have nothing to worry about these institutions who are controlling the market and who are controlling these levels. But if you are a trader, then you need to learn the rules of the game. And this game is played by big institutions. So my personal philosophy is that if you cannot beat them, join them, right? So based on my analysis, when I found out, okay, this is a clear support area, I took a long position, made some money, not by going against the institutions. The intention is to not go against the institutions. The intention is to go with them. Find what the casino is doing, right? So you have to pick a side. Are you going to be a gambler or are you going to be a casino? So I decided to be a casino today. And by aligning the direction of my trade with the direction of the casino, I was able to make money. So that is pretty much what I wanted to talk to you guys today. The ugly truth about support and resistance. And the reason I call it ugly is because a lot of people who are buying options, they don't really understand that why they are not able to make money. I mean, sometimes somebody will hit a jackpot, but eventually if you see on a 6 months basis, 1 year basis, most of these traders, they are losing money and they don't understand the hidden forces that are controlling the market and taking the money away from them. So this is my intention. This is my endeavor. This is my effort to generate awareness about what really goes on behind the scenes so that you don't lose money and you know how this game is played. Now, there is one last thing that I want to say, and that is on a personal note, that we put a lot of effort in making these videos. And today, in fact, for example, there is something very interesting that I wanted to share with you guys about trading psychology and how I had to struggle with that in today's trade. But I want to make sure that we get feedback from you guys that you are interested in watching these videos. You want to learn from real life trading, because if you are putting some effort and we don't see the result, there is no encouragement for us to keep doing that, right? So if you guys want to learn, let's say, for example, from today's trading session, what psychological mistakes that I made because of which I was not able to make as much money as probably I should have, then do let us know in the comment section. Do let us know through your likes and views that you want to see this, right? Because my team and myself, we are putting a lot of effort in making these videos, making these insightful, practical real life videos. And if we get that kind of a feedback, we will keep doing this. But if we don't, then we probably will not have that kind of encouragement to keep doing so. So that's my appeal to you guys. With that said, I hope that you guys learned something new, and hopefully you can apply some of this knowledge in your trading life.